Sole trader's income statement consists of two sections. In the first section, we calculate gross profit or gross loss. This is a trading account section. In the second part, we calculate profit for the year or loss for the year. This is a profit and loss account section. For your better understanding, today we'll cover a question. Let us have a look at there. Fatima is a sole trader. She prepares her financial statements to the end of March each year. At 31st March 2022, Fatima's ledger account balances included the following. So here we have revenue. This will come in the trading account section. Sales return will be subtracted from the revenue. Purchase trading account section. Rent and rates will appear in the profit and loss account section. Wages, profit and loss account section. General expenses, profit and loss account section. Insurance, same. Discount receipt, same. Inventory, it will appear, it is an opening inventory, so it will appear in the trading account section. Fixtures, this will not come as it is an asset. Fixtures and equipment provision for depreciation, this will appear in the profit and loss account section. Trade receivable, it is an asset, it will go to the statement of financial position. Trade payables, it is a liability, it will come in the balance sheet. Provision for doubtful debts, it will appear in the profit and loss account section. Cash drawings, okay, this amount will be appear in the capital account and capital, same capital account. Okay, today I'll show you how to prepare capital account as well. Okay, then at the end of the question we have 7 adjustments. Okay, so these adjustments we will adjust with this ledger account balances. Okay, so first of all we will prepare trading account section. Okay, so what items will be included here in the trading account section? So first of all we need to write the revenue. Revenue means the sales revenue, right? Okay, so let us write here revenue. So it is $79,400. Okay, then we have return. Okay, sales return. So sales return will be subtracted from the revenue. Always don't forget. Okay, so let us write here minus or less sales returns. So we have on the question $3,970. Okay, this amount will be subtracted. Okay, so what we get after subtraction? We get here $75,430. Okay, so this is our net revenue. Okay, now we will calculate our cost of sales. Okay, how to calculate cost of sales? Opening inventory plus purchase minus closing inventory. Okay, this is our cost of sales. If we have an adjustment with purchase, for example purchase return carriage inwards or goods for our own use, we will do it with the purchase. Okay, so now let us write here less cost of sales, less or minus, whatever you prefer. We will write here cost of sales, or we call cost of goods sold. So here first of all we will write opening inventory. Okay, opening inventory will be given on the question. So let us write here opening inventory. It is $3,000. Okay, we will write here on the middle column. So here we have $3 columns. So this is just to facilitate our calculation here. Okay, nothing else. Then we will write here purchase. Okay, so we'll add purchase with the opening inventory. So let us write here purchase. So we have purchase here $36,500. We wrote on the first dollar column because we have calculations with the purchase. Okay, so here on the adjustment, look at number 2. Fatima took goods for her own use from the business during the year ended 31st March 2022. These goods cost $1,300. Okay, so if we have any goods for own use, which is also called drawings, it will be always subtracted from the purchase. Okay, so let us write here minus or less goods for own use. So it is here $1,300. Okay, so if we subtract, we get here $35,200. Okay, this is the calculation of this purchase and goods for own use. Okay, then we have here closing inventory, right? So before we write closing inventory, let us add purchase with the opening inventory. Okay, so what is our addition here? We get here $38,200. Okay, now we will subtract our closing inventory from this addition. Okay, so let us write here minus or less closing inventory. So here on the adjustment, number 1, inventory at 31st March 2022 was $3,120. Okay, so we are doing this account at the end of the financial year 31st March 2022. So on this day we have closing inventory which is 3,120. Okay, so we will subtract this amount, $3,120. So if we subtract, we get here 35,080. Okay, so this is our cost of sales. Okay, so we know gross profit equal to sales revenue minus cost of sales. Okay, if our cost of sales is greater than sales revenue, then it is a gross loss. Okay, so here we have sales revenue 75,430 and our cost of sales 35,080. So obviously we will have gross profit. Okay, so let us subtract this amount, cost of sales. So if we subtract, we get here $40,350. Okay, so this is our gross profit. So let us write here gross profit. Okay, so this is how you need to calculate gross profit in the first section of the income statement. Okay, so here you may have more adjustment. So if you have purchase return, you need to subtract from the purchase. If you have carriage inward, you need to add with the purchase here. Okay, next part I'll show you how to prepare profit and loss account section.